because it's an opportunity for me also to update on the subject. Otherwise, which I could not have done. In normal course of our regular routine work, we'll not be having a time to update ourselves. So whenever I find a time to or get an opportunity to deliver this speech or my presentation, I immediately accept because I am a selfish fellow because I will update myself. So I immediately say yes. After getting this one, I will ask what is the topic. So first thing I will update on the topics because my knowledge might have been limited to the extent of last years. So I have to update myself with regard to the new circulars, RBI notifications, directions, etc. Today's topics, what has been given to me, one is planning and documentation, other one is IRAC norms. It's a very unique in the sense the first topic is judgment. Second topic is on rule based. Two different. IRAC norms, you have no any right to change the rules or anything. It's a rule based. RBI has told what is what are the steps to be taken, what are the principles and definitions, everything is clear. Even the formulator has no any say or deviate from this one. Whereas planning documentation, it differs from person to person. It differs from person to person of his own judgment. In my opinion, I feel so and so item is more audit evidence, but in others' perspective, it is different. In our general practice, we do the audit, we do the documentation, we do the planning, everything as per our knowledge, as on our that day what we possess the skills. After that, what happens? It will not end. Once you finish your audit, you cannot say that I have completed this audit and I have free. Subsequent to that, you have been followed by peer reviewer, maybe regulatory authorities like banks, RBI, or our institute disciplinary sections, or maybe control and audit general audits in case of a PSUs. So that also follows. Then only once they feel that your documentation is correct, your planning is correct, you can say your audit is completed. Till that time, you cannot say that your audit is completed. So when you face the people like a CNDG audit or peer reviewers, then only will come to know what are the deficiencies in our documentation, in our planning, or in our approach, or all those things. Because we have to cover the requirements of our institute. We have to follow the guidance notes issued, SS and accounting standards, and also ethical and standard requirements. If you complete all these three, then only your audit is perfect. So I prepared my slides. What you feel it is important. So my first documentation, maybe it may go for 1 hour. After the tea break, we'll have the IRAC notes. Chairman, in his opening remarks, he told the time limit, time what is given is very short. This is the buzzword. normally we use here the time constraint. In all the bank audits, the buzzword more than the audit, we say time is very less, time is very constrained, but we have no option because it's not by the bank, it is by the regulators. SEBI wanted the accounts of the banks or listed companies has to be published by 31st May is the last date. It is not banks required, it is regulator. SEBI is a requirement that audit has to be completed by 31st May. So accordingly, they will plan. So 31st is the deadline to submit to the SEBI. Then they will plan how many days it is required to have their board meetings. Again, before that, how many days central auditors required to complete and how many days it requires for consolidation. And when at least the branch audit has to be completed, submit to report. We always blame them. Oh, it is the SEBI who want the results to be published by 31st May. So because of that, to meet deadlines, the bank has given the dates on which date bank audits to be completed and on which date consolidating auditors have to give their opinions and then it has to be approved in the board and subsequently has to be published. So this constraint what we use, we eagerly waiting in the month of March as they were informed when we'll get the appointment letters, when we get this one, and when we get the mails, when we get the calls, all those things, we'll be waiting. After getting that, so we'll be saying no time, nothing like that. So we have no say in that. Our time constraint is the excuse to say that we can't finish this audit. So once you get it, how we can come out this constraint of the time? Start planning immediately. After getting the appointment, just call to the bank or to the branch. What is the advances figure? What is the deposits figure? So you can know the size and immediately you can also plan. So depending on the size what you give the bank, you can make out, oh, this many people are required. Sometimes what will happen? The volume, the quantum may be more. So we did one bank audit. ABC, which did the complex bank like the Bombay. 15,000 crores is the advances. Number of accounts 52. Only 52. But the quantum of the advances given to the borrowers is very high. All above 1,000 crores, 1,500 crores, 2,500 crores. Right? So you can also call for the information. What is the quantum and also the number of accounts? You see, if you say, if you get an agricultural based branch, definitely you will have the number of accounts more. Where it is a commercial branch, like in Vijayawada main branch, you will not have much agriculture loans, but you will have the more cash credits and business loans, this one. The number may be less, but the advances figure of each borrower may be more. So in such a case, you don't require repetitive documentation verification. In case of agriculture loans, if you go to agriculture branch, you will have 5,000 accounts of 50,000, 1 lakh, 2,000, 2 lakhs, like that. But if you go to a commercial branch, you will have the number of the size of the loan may be more. So you have to study all those things before you start the branch audit. So you have to plan for it. So what is the nature? So you have to study the nature. And here I will conclude my last sentence. Being professionals, rising to occasion is the best quality we should possess and meet the challenges. And when we say when we say we want to do CA, people will say, hey, doing CA is a challenge. Your challenge will not end with that. Your challenge continues. Whenever you get an assignment, not only bank audit, any assignment you get, completing the assignment in time with quality work is a challenge. Take it as a tax audits. We have the 30th September is the last date. We will burn the lights all night. We ask our assistants to stay back overnight, complete the audit, and file the returns. Don't you feel it is a challenge for us? So, this one challenge is not end in our lives. Every assignment is a challenge. So, you have to meet these challenges throughout the life as long as you practice. So, this bank audit also is one of the challenges to complete it in time. So, being professionals, we should have one possess the best quality, we should rise to the occasion and complete the assignments. Statutory audit of banks involves a number of peculiarities due to some unique features of the banks and banking operations. Because what we do in the Companies Act is different. Because Companies Act covers under the Companies Act 2030. But whereas this comes under the Banking Regulation Act. So totally what we do all the year, companies, partnership firms, tax audit, for 11 months what we do is differ this 1 month this bank audit because it comes totally under the Banking Regulation Act. So we have to be thorough with that. What is the Banking Regulation Act? How far it is applicable? All the formats of the balance sheet, profit and loss account, disclosures, everything goes as per the Banking Regulation Act as well as the disclosure norms of the SEBI. So before starting the audit, you should know under which act it comes. So it is a Banking Regulation Act. So be little familiar. You need not be a thorough 100% person, but at least what is balance sheet format? What is profit and loss account format? What is the disclosures mainly required? So actually, in order to maintain quality in statutory audit of the banks, provides detailed guidance to the members conducting the audit of the banks and their branches. So this way, we should be grateful to our institute. Every year, they update guidance note on the banks. In 2023, I was also part of that team, completed the guidance note. You know, we get appointments in the month of March. By the time we get, hand, ICAI has to give their guidance note to the members. The work of the updating this guidance note starts in the month of September. We get a call. So, who will be the members for the audit team? Members of the team to update the guidance note and various Zoom meetings and various meetings, and they will allot which area I have to look into and submit what is the areas already existing in the guidance note, what is the updation. This conversation and this movement of the information moves between us and the guidance note team at the institute level. So it is not that so simple that guidance note has come. So a lot of work and involvement is involved behind the issue of this guidance note. So That way, we are lucky. Our institute is updating this guidance note every year and giving us. I say this will be a Bible to us, this guidance note. When we do the audit, practically, we'll have n number of doubts, n number of problems. Maybe we'll maybe not be able to take a decision depending on the uh, matter involved in that particular situation. Maybe NPA classification, maybe presentation, maybe disclosure, all those things. But in such a case, we should refer our guidance note first. And also the IRAC norms issued by Reserve Bank of India. I will say confidently, 75% of your doubts will be closed. Afterwards, still you feel you are not able to come to a conclusion. Still, you will have an option to contact your central auditors, bank management, or your colleagues. Now, our institute will also come out with having an empaneled uh, members team who will be available from April 5th to 15th of April or 20th of April. During that time, you can also contact that expert members who will be helpful to us. Fortunately, I had that opportunity. I was a empaneled expert panel for last 3 years. So please kindly make use of this guidance note. IRAC norms, our RBI, this master circular, and our experts panel of our institute. Understanding the business of bank branch, which I have already explained. So what is the nature? Is it a commercial branch, agriculture branch, or you will also sometimes we get the audits of the service branches, like centralized processing centers for the loans advances. You may get that also, where you will not have any regular banking transactions like savings banks, current accounts, personal banking, all those things. They are exclusively meant for doing a particular job. Some banks will have a centralized processing center for the loans. So you will have only processing there. So the branch, immediately after getting the intimation, you should understand what type of the branch you got the audit. So you should understand the nature and the business of the particular branch. The auditor should also have a basic understanding of the core banking solutions. What is the CBS used by the bank? Whether they are using FineCube, Finacle, which software they are using. If you have already done a bank audit previous year, and the same bank, normally once you being allotted a particular bank, so 4 years you will continue. In the next, after 4 years, of course, now there is no pooling concept now. So every year you will keep getting, if you are fortunate. So once you get the another bank, for example, last year you have done Canara Bank. So after your 4 years schooling period, your 4 years term is over. Then subsequently you get the other bank, because as a system, they never give the same bank more than 4 years. So you get the other bank. So you see, last year you might have done some bank. You are thorough with that CBS and their software. So next year you get other bank. So in such case, you should know which software they are already using. Risk assessment is to be done. based on the clear understanding of the business profile of the bank premises, bank branch. Means what is the risks involved? It is one of the criteria. Any audit before you take up, you should do the risk assessment. What are the risks involved in accepting that assignment? Sometimes you may get one cooperative bank audit. The bank is already in trouble. Will you accept it just like that? Will not do. Because people will say, hey, don't accept that because it's a low, more risk. Even when the common man is able to tell you that, oh, there is a risk because already rumors are there in the market, in the business circle, oh, that so and so bank is in trouble. Definitely, we'll think twice, thrice to accept. That is called risk assessment. Risk assessment is nothing big. So it is you should know which assignment you are going to take, what are the risks involved. In normal course, if you get a normal batch, you would know this one, your risk is very less. If you are already, we are getting now Paytm Bank, it's in trouble. So RBI facing, telling, will not have this one. And many times they might have issued 35-year notice, supervision notice. So in such a case, whether they have such risks in accepting that assignment. The auditor should find out the role and responsibility of the branch official and the internal controls in operation. So this deals with the delegation of the powers. So what is the bank staff available? Sometimes you may get a small branch where the manager, he himself will be the cashier, he himself will be the one-man branch. So in such a case, he is the one and all. Where you may get some very big branch headed by CGMs, headed by AGMs, headed by DGMs. So there, what level of that bank, whether it is headed by DGM, whether it is headed by AGM, headed by chief manager, by seeing that itself, you know the status of the branch. If it is a CGM branch, topmost, then comes to DGM, then comes to AGM, then comes to chief manager, maybe scale to officer, like that. So who is the heading the branch? With that itself, you will come to know the size of the branch and also the uh, persons who are handling that, what is their limits, what is their delegation. The CGM will have more powers, whereas the senior manager branch will have less power, where he has to take more approvals from the top management. So like this, each branch will have the limitations in sanctioning, in operations, everything. So we should know what are the limitations of that responsible persons in that branch. The auditor should have a thorough understanding of RBI guidelines, prudential norms, and master direction and RBI, including relevant internal circulars issued by the bank. Mainly the annual closing instruction circular. As I told you, we have to follow the RBI guidelines thoroughly and strictly. We have no any choice in deviating the norms. And mainly, every bank at the end of the year end, they will issue annual closing circulars to the branches. So kindly after immediately going, you can ask annual closing circular. In that, they will mention what is the exercise to be done at the branch level for the annual closing. Like what is the outstanding liabilities to be provided on the 31st March? What are the closing returns to be prepared by the branch? Out of that, how many are to be certified by the branch officers? Like that, in the annual closing instruction, they will be intimating what are the returns to be made and what are the returns to be signed by the only branch managers, to be signed by the branch auditors. So please kindly have handy of that annual closing circular. Audit planning. How to plan for the audit. The auditor should plan audit keeping in mind the requirements of SA 300, planning on audit of financial statements. So SA 300, very clear what is the documentation. Why institute is giving standard on auditing? They don't have any other work. Not like that. If something happens tomorrow on some issue, we should be protected ourselves. How we can protect? If we have done our job perfectly. How to do our job perfectly? Our institute has given audit standard on audits. Please follow these are all the procedures to safeguard ourselves tomorrow. It's not like that some material to be prepared or some material to be issued and give it to the members. Is all whatever essays they talk about. It's only to safeguard us tomorrow. So what is the documentation required? How it has to be planned? All those things, all this standard on auditing will speak. So one of the relevant standard on audit is SA 300, planning and audit of financial statements. The auditor should work out an overall audit strategy for the execution of audit within the time limit. The auditors should apply the concept of materiality in planning and performing an audit of financial statements as per SA 320, materiality in planning and performing an audit. So bank audit is a very vast. The volume is very much. Can we do 100% checking? It's impossible. But we should have the materiality concept to get comfortness before giving our opinion. So what level of materiality? Can you say, I check only zero balances accounts? We can't say. So we should have sample selection. That's called to select the sample selection. We should have the materiality limits in selecting the accounts. So profit and loss account, if you take, we can't check all the entries of the profit and loss account and all the accounts of the profit and loss. Have one materiality limits. How to select the sample? Selecting the sample is nothing but with a criteria to have a limits up to which limit you don't want to check, up to above limit which you want to check. So that is called the materiality. How to select this materiality has been dealt in SA 320. Sometimes in the case of the banks, the central audit also will fix materiality, what they feel. So the president should so and so quantum of the accounts or the so and so value of the items to be checked. If they have spent that in their communication to the branch auditors, we should follow that. If they don't mention, you should follow SA 320.
Even in selling MOC or
yes. No, MOC, they will tell, but my suggestion with regard to MOC, whatever you feel required to be sent, you please do it. At the central office level, depending on all the joint auditors together, they will MOC to be affected, which MOC at the macro level, and they will with other branch audit celebration. Whatever you feel, MOC, give it. So they will decide further. Because whatever the reports we forward, to the central auditors. It will be vetted by them and they will decide at the macro level, at the whole bank level, whether this MOC can be affected or not. So please kindly, whatever you feel MOCs, materiality or the macro level. The category of the branch to be audited will also determine the overall audit plan and the various checks to be applied for the audit. Large or mid corporate, retail branch, rural or agriculture branch. The audit should assess the resource requirements for audit to be completed within the stipulated time. Audit team needs to be updated with banking law and regulations and RBI guidelines. So we are going for a different type of audit, the bank audit. The people who go there, at least they should be equipped something about the bank. They cannot go and do the what they do for the tax audit. It's a different. So we should select our team, at least one partner and the team members having the little knowledge about the bank. If they don't have, you cannot say that you cannot send them, but update them and send it. That's what my suggestion. Don't send them blindly. Somebody has joined last month, but please guide them what is required. Tell them now my assessment with regard to present the people what we are getting. They are really excellent. You tell them, please go through this. Because the people coming nowadays, they are excellent. So only the way how to we utilize them is all in our hands. So give them, okay, this is the master circular, this is the guidance note, this is the NPA classifications. Update them and send them. Definitely they will be very much useful to us during the audit time. If you send them blindly, make it a point, instead of they helping us, they will become a burden to us. So please ensure that they will be given a proper, be updated with the banking requirements for the audit. Detailed requirement letter seeking information regarding the branch should be sent by the auditor to the branch management so that necessary information is received during the planning stage and accordingly proper audit plans can be made. Kindly spend at least 1 hour or 2 hours. Make a small note of it. What is required if we go to the branch? Make a list and send them the mail in advance. By the time you go, at least they can keep it ready. If you go on to the branch for the audit and then ask them, I want this, definitely they will say, sir, give us some time. Instead of that, send them the mail. What is your requirements? Like what is required? You require in case of a cash, whether the somebody on 30th cash verification report by the internal auditors or by the branch, let them ask. And regard to bank reconciliations, ask them to keep the bank reconciliation statement. Advances. You can generate the reports because of the core banking, everywhere softwares are used. Whatever the reports you want, whatever the information you want, it can be generated. You tell them all the accounts with limits, with outstanding balance, overdue accounts, all those things. You can send the mail what is required so that that information will be kept ready when you go for the audit. So if you go and start the audit, that time if you give that list, definitely they will ask for 1 or 2 days time. Instead of that, you send a communication, what is your requirements. Of late, nowadays, they are giving the user IDs and passwords up to the inquiry level to the branch auditors. And this cannot be created by the branch manager. They will have the data center where these things will be created. So send them before itself who are the audit team you are taking with their names, their credentials to the branch. Ask them to keep it ready, the user IDs for our team members. So that in my experience, they are taking minimum 2 days to give the credentials for passwords to us. So instead of that, send a mail. Then when we go there, they will ask, sir, in whose name we have to create a ID. So to avoid that, send them mainly create the credentials ready when we come for the audit. Definitely, because the one advantage with this tax. See, in case of a tax audit or in case of a private consult, my experience is they come to us only when they need. 100 times you call, sir, your report is to be ready, your audit is to be ready, they will not give an ear to you. They will come only bank manager insists their financial for renewal of the sanction. That time only they will come to your office. But in case of the bank, they are also pressured. They also want the audit report to be given in a stipulated time. So they will also cooperate with you. So only how we take the advantage of this situation is also in our hands. So tell them these are all the user IDs required. We please keep it ready when we come to the branch. Definitely they will do that. If you go there and ask them, because it is not in the hands of the branch manager, because it has to be created from data centers. So we should see what we need to be get in time so that we can do the audit.
So here, one small question. Bank card automation thing is coming right now. So how far it is? RBI has given instructions to the banks that their software should be updated for bank card data. Yeah. Yeah.
See, bank audit documentation, one is core banking. They are having the software. All the required reports will be generated, but that only. So regarding this audit trials and this one, we have to say now because we have to give audit trial has been implemented or not. You are talking about that only? Yeah. Yes. So we can have audit log. Please after this 31st March, we have given the quarterly review reports. In that, it's mandatory to say that whether EL has been implemented or not. Audit log is available. We can generate, gives a report who has entered, which system, which particular time, and what is the transaction he has done it. That reports can be generated. So we can generate that report and whether the EL has been effectively for the whole year, it has been implemented or not. So that reports can be generated.
Yes, assistant manager has to be
All the systems connected, except where the manual intervention is there. Because nowadays there is no manual intervention. Earlier they used to class subject separately and then some rank identity separately. Now there is no this one. It's everything is automated. So everything is coming under the CBS. So that way, whatever the softwares, our requirement is all the softwares having EL or not. So because in the case of a bank, you will not have any issue because it is a core banking, but it is a always updated.
They say we don't know the log, so they are not providing to.
No, we can ask them to generate. It is possible because few companies, what we are doing now, we are having the audit log reports generated. Based on that only we are issuing the reports.
With report.
Yes, 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 yes.
What general comment, sir?
Not comment.
It's effective or not, we have to comment
Yes.
on the report.
Effective or not, and that log should not have been disabled for any particular period of the time during the year. That also we have to specify. But in what when the situation will come, when the software has a failures during the period. For example, software not worked for 2 days, 3 days. Then we have to report on so and so date this audit log, audit software was not used. We could not verify the audit log during that time. Effectively, continuously, without break, whether the audit log has been implemented or not.
Also find out the errors and so.
Errors is not required. We have to mention EL log, edit log is kept open all the time. That is our requirement. Audit procedures, understanding forms and contents of the financial statements and reporting. As per the Banking Regulation Act, what are the financials required? Because now all system generated. There are two types of reports in the bank audit. One is system generated, where you have no any say. Finance balance sheet. It is generated given to you only for signature. You cannot alter a single word or single letter or single item in that this one. Any differences you will notice, you can only do through MOC. There are certain returns like that. And there will be some other information may be required for the further submission to regulatory authorities like SEBI, maybe to the in case of a interest subvention, they will be forwarding for claiming back from the government of India or subsidy or this guarantee commission they have paid. All those things, certificates they will ask. Where certain times we have to enter the data in that certificates. So few returns where you will have no say. You have to just sign whatever your observations, you have to give it through MOC, or certain returns where you have to enter the data and give the certificates. So when we were doing the State Bank of India audit, so that time they had a reform, because so many returns were being signed, kept hard copies being asked that. So they did the I can say reforms in signing the reports from the auditors. So we told them they had a serial number continuously. What are the returns? Then I suggested have certain types of return where auditors has to just put signature, where the data has to be entered by the auditor. So they have, I told them you have a different prefix for this and this. Immediately they accepted my suggestion. They have divided the returns into two different types. So that returns where you have no anything to say except signing, anything you notice, observe, you can only give through MOCs. Wherever that data has to be fed into the return, you please check that from the financials or from your data and then enter and sign and give it. And we should be very careful which returns to be signed, which returns should not be signed. Any paper in that last minute rush, the branch manager will come and put hundreds of returns before you and ask for the signature. Will you sign it? Why? Why?
We have to verify.
No, verify whether that particular return is to be signed or not. How you will come to know?
And what was the finance?
Okay. That's one. We will always get one engagement letter. What for we have been engaged. In that engagement letter, it should have been specified in the terms of employment based on the terms of engagement. Whether in that specifically mentioned, this return is to be signed by us or not. Other way is, as he said, annual closing return. Otherwise, the branch manager will not be having any knowledge. It is to be signed. He will just bring all the papers and keep it, sir, please sign. So we will be last minute how it will be. You might have booked your return ticket. You will be in a hurry. Go back to hotel, check in, and this one. Sometimes you will ask the branch manager bring the returns to the bus stand and sign it.
But even after close of audit, when you return to audit, or after time also they are sending mails. You missed this one and.
Yes, yes. That is why we should be very, very careful. Please list out what are the returns to be signed. Tell them, please kindly keep it ready so that we will finish. And one thing, practically what I advise, don't wait till last minute to sign. One return, today we have taken up DSCGC commission checking. That is over. Your work is over that day. You please sign it and keep it in the file. Don't wait. This will have the last minute along with other returns. You finish one job, one return checking is over, just sign it and keep it. So once you keep like that, no, last minute you will not, you need not require to sign anything. You finish the job, prepare return, get it copies. How many copies you want to ask? Sometimes they will ask 3 copies, 4 copies. Prepare certain number, sign it and keep it that time itself. So you will not have that last minute rush, and sometimes will miss. They will come, they will disturb you. Sometimes they will come only with the return without any information. They will ask you to sign. So definitely we will have some discomfortness to sign those returns that moment. But you have no option. You have to sign it because the branch manager will insist, sir, corporate office is asking, central office is asking, this is very much required. You want, you come to the branch, I will show you the information. You will not have time. You are bound to sign discomfortably those things. Please avoid those things. This can be avoided. My system, wherever I go, immediately after checking the return, I will sign and keep it that 4 copies. So that, yes. The date of the IRAC. Date of the audit. We are issuing the report. Last day or whatever the day you put. And certificate on sign and keep it. Date you put at the last day when you take the UDA. That day you can put.
I think this is the case, sir. Our report has sometimes translation I report handed some so that the management comes to that. Please sign it on the digital signature.
Yes, that time you will have the 2 problems. Wherever you are giving a report other than what you have already given, you should generate a new UDA.
But UDA content is not valid.
Mm.
The certificate, one certificate is missing by the branch manager at the time of the audit. Finalized come to office, then he knows that some certificate is missing the signature. He take the digital signature. The date will be after.
Definitely no, because you are affixing the digital signature. Because it is a hard copy means you can put any date, you give it and give it. When you are affixing the digital signature, you have no option putting that date. But you will have a literally problem. So that's why annual closing, whatever returns to be signed, take a print and keep it on the in your file. At the time while leaving the branch, you just check whether all that has been issued or not. Yeah, yes. That is the best way what you can overcome this issue. Various class certificates and reports to be issued. Along with our independent auditor's report, we also have to give so many certificates for the banks. It differs from bank to bank, and some certificates for the central auditors requirement, some certificates for the SEBI requirement, some may be for government of India, some may be for reclaiming that subsidy, or some may be for DSCGC commission, and internal controls like Ghosh and Jilani reports. Like that, we have to give so many reports. I have just given in my next slide what are the reports normally they take. Certificate of cash and bank balances, certificate relating to MOC, entries of the previous years being accounted for or not, certificate relating to credit and deposit rates, certification of technology upgradation fund scheme, non-SSI textile centers, certificate for advances to infrastructure projects and income generated thereon, statement of accounts restructured, rescheduled, or renegotiated relating to CDR and non-CIDR accounts, certificate of advances exceeding 10 crores, certificate regarding compulsory deposit scheme, certificate relating to recoveries in claim paid accounts under the SLGC scheme, and certificate of borrower companies by chartered accountants, company secretaries, as per RBI circular on lending on under consortium arrangements, multiple banking arrangements, dated this one, certificate for gold coins held, certificate for gold deposit scheme, certificate regarding special deposit scheme, certificate for IRAC status, certificate for IRAC status of the credit exposure in respect of borrowers having exposure with foreign offices, certificates for Prime Minister's Rozgar Yojana, a report on status of compliance by the bank with regard to the implementation of recommendations of the Ghosh Committee and relating to frauds and immoral practices, and of the recommendations of the Jilani Committee in the internal controls and inspection and credit system, certificate for gold stocks held for the sale of gold or metal gold loans, certificate for agriculture interest subvention, certificate for agriculture interest subvention claim of 2% for disbursement made during the financial year, certificate for additional interest subvention for prompt repayment for short-term production loans disbursed during the financial year, the report on audit of the DSCGC items wherein auditor has to specify, verify, certify correctness of the data in various returns and the insurance premium paid on the DSCGC. So like this, so many certificates they will be asking you.
Previous years, the first report, previous year mostly entries are passed or certificate. How we know sir that entries are passed at the huge only?
With see what how the procedure will happen. On 31st March, we generate the returns. We sign and we give the MOCs. So that MOCs cannot be affected at the branch. They will forward to the central office.
Yes.
At the central office, so they will consolidatingly they will pass. And they will intimate to this branch. These are all the MOCs affected. So they will pass subsequently in this current year. So that certificate we can verify whether that MOC has been affected in this branch or not.
That's like that. Last
Right. Yes, he has proposed that time branch cannot pass any entries. MOCs will be forwarded to the corporate office. There they will, depending on the materiality or significance of the MOC, they will decide and they will ask them to pass the entries in the bank. So it will happen after the audit is over, all everything is over. So as a current year auditor, we have to see that previous MOCs, what is affected at the central office relating to our branch, whether they have been affected in this branch books or not, we can see.
interest subvention, sir, in case of interest subvention, not only that's for current financial year, they take earlier financial subvention certificate also.
So in this case, what will come? Disbursed previous year, prompt payment done this year. That certificate will be, has to be issued by you. They cannot ask you the certificate relating to previous year's subvention claimed. Whatever claimed during this year may be relating to disbursements of the previous year. Because previous year, February, it might have disbursed. So prompt payment when it will come in the current year. So even though disbursed last year, prompt payment subvention, they will take a certificate from us only. So we have to give. So key audit documentation. The SBA, Statutory Branch Auditor, should also prepare a tracker to list down the queries raised. You might have asked some doubt or some query. You should have the track of those things. Responses received from the branch management, further queries and responses, if any, in the final conclusion of the SBA. SBA should maintain audit documentation in such a way that will serve as a satisfactory evidence that the audit was planned and performed in accordance with the SA 230 audit documentation. So there is one more SA is available to us, 230 audit documentation, whether we have done as per that or not. The auditor should prepare audit documentation on a real-time basis. What is real-time? When we are doing the audit, there itself, you should prepare the documentation. We cannot say that, okay, we'll finish the audit because time is not there. After going to our office, we'll prepare the documentation. What will happen? In our office, we have a system. Any report should be given at the entity's place itself. We never prepare even a single report in our office. Why? We'll say, okay, today work is over, we'll go to the office and tomorrow we'll prepare the report. One assistant will say, sir, tomorrow my grandfather is dying. He is not died. I may have to go. I don't know how many times this grandmothers will die. Because we will also not remember whether how many times grandfather has died. So that fellow will go. Any query raised by that assistant will not get the clarification. My partner will tell this information is available with that fellow. So I will finalize the report after he comes back. That is kept pending. You might have verified 100 times things. You might have found out at least 20 mistakes. When you don't have a proper information, when you are finalizing the report, you will say, okay, ignore this point, next time we will see. Even though you have done a donkey work, but you are not able to produce your report because you don't have the proper information to put that point. That's why even it is 1 day delay. Prepare report, submit, take branch manager or wherever he is in the concurrent audit or in the stock audit, wherever it is, it's 100% will follow. The report is prepared, submitted, signed, bring the report final copy to our office. That is my strict instructions. We never prepare report in our office. This is our experience. We are missing the points. We have done so much of work. Ultimately, end of the day, I want to put that report. My other partner will tell this is done by some assistant. He is not available today. So this we'll see in the next one. So to avoid that, take the clarification from the entity there itself, put your point, complete, print out, submit, give the bill and come to office. That is our system. The auditor should prepare an audit documentation on a real-time basis with conducting the audit. Audit documentation may be recorded on paper or on electronic or other mode, which can be easily retrieved as and when required. It's not that you should only prepare on a paper and keep it. It can be Excel file. It can be if you have a Google file where everybody can be update their queries. Audit should contain audit plan and program, final working papers and analysis, issue of memorandums if you have issued any memorandums, summaries of significant matters discussed with the branch management, letters of confirmations and representations, checklists, correspondences concerning significant matters with the branch or central office, any other documents which auditor himself feels necessary. So these are all the minimum documents in our list. Maybe it differs from person to person. It differs from firm to firm. Already we'll have the documentation processes which are to be kept as a record, like AS compliance, SA compliances, and then audit team evaluation, risk assessment. All those things should be kept in our documents. So hopefully I have completed the given time regarding to this documentation.
Thank you, sir. We'll break for 5 to 10 minutes. Again, we reassemble here in at before 11:40. Thank you.
Any doubts you have, we'll have a comfortable time for discussion. So after completing my next presentation also, you are free to talk relating to this also. I welcome your queries or any doubts or anything. Thank you. It's commanded. Next topic. They are also called prudential norms. These norms are issued by Reserve Bank of India. When these prudential norms came into existence, it is on the recommendation of Mr. Narasimhan Committee that provision should be made on the basis of classification of advances recommended by Narasimhan, accepted by Reserve Bank with some modification in the year 1992. The RBI, through its circulars issued guidelines to be followed by all the scheduled commercial banks for income recognition, asset classification, provisioning, and other related matters. These guidelines are commonly referred as prudential guidelines or prudential norms. With the introduction of prudential norms, the health code based system of classification of advances has been ceased. Before this prudential norms, there was a health code system concept which has been gone, and prudential norms came into existence. Since then, RBI has issued many circulars and master circulars in this regard. The latest master circular issued by RBI is on 1st April 2023. That is the binding on us for any classification relating to classification, provisioning. What should be the provisional norms should be followed for the subsequent periods is the 1st April 2023. That is the master circular latest available to us. So this is made into 5 parts: classification norms relating to NPA, income recognition, provisioning, and disclosures. So this status of asset. What is asset to the bank? Mainly whatever that comes on the asset side of the bank. So one of the major item that will come across is the loans and advances given to the public. So whether it is a performing or non-performing, only two classification, whether it is performing or non-performing. An asset, including leased asset, becomes non-performing when it ceases to generate income for the bank. So there is no definition for performing asset. There is a negative definition given for the non-performing. First, they have given a definition for non-performing. So performing asset is which is not forming part of a non-performing asset. The RBI has told once the income ceased to generate to the bank, it will be treated as a non-performing asset. When to decide whether it is a non-performing, it has been subsequently has been explained. Broad categories of advances for the purpose of provisioning: standard asset, substandard asset, doubtful asset, loss assets. So first one is the performing standard. Next 3 categories are the non-performing assets. So non-performing asset, first it will go to once the ceases, the income has not been generated. The very first stage of a non-performing asset is substandard asset. So what is substandard asset? Where the income has not generated to the bank and classified as a non-performing and kept for up to 12 months. It is a substandard asset. Once that 12 months is over, is not upgraded during that period, then it will move to doubtful assets. Again, in the doubtful assets, you will have 3 categories. After the doubtful asset, it is a loss asset, where the bank will, there is no recovery or it is a totally loss to the bank, then it is called as a loss asset. A bad man can never remain as a bad man forever. There is always a possibility he can be converted into a good person also. Similarly, a non-performing asset cannot be non-performing forever. There is a possibility that it can become a performing asset also. Maybe why this account becomes an NPA? Maybe due to deliberate or maybe willful default, willful intentions of the borrower, or maybe sometimes bad planning or bad management of the funds, or temporary liquidity problems, or maybe due to various reasons. which may not be in the control of the management also, the accounts slips to NPA. But once their position improves, they can also be upgraded to non-performing. Performing. Upgradation of NPA account is permissible on repayment of arrears of interest and principal by the borrower. Such account should be no longer be treated as NPA and may be classified as a standard account directly. Upgradation within NPA category is not possible. So once the account has been treated as an NPA, subsequently maybe the promoters may bring in their own funds and pay back all the dues, including interest, principal, whatever outstanding as on their date, to overdues. I'm not talking about the total dues, overdues. They may pay back. And once the bank get back their all the overdues, including interest and principal, the bank can upgrade the account to standard asset. It cannot do that. I will answer it today. I will make a part of it. Please kindly bring me from loss asset to doubtful asset. It's not possible. I am now doubtful asset. Some leverage, some funds have come. I will say that, okay, instead of some money I will pay, please make me substandard. That cannot be done. If they want to be upgraded, they have to come out of the non-performing stage to performing. It is possible only once they pay back all the overdues as on the date of the interest as well as the principal. The asset can be directly shifting to standard asset. What are the types of facilities available at the branch? It will be in the form of term loans, cash credits, bills purchased, and other loans. The term loan is for the purpose of purchasing any fixed assets, maybe vehicles, maybe building, maybe machinery, etc., which the payment will be made on monthly installments or quarterly installments, fixed EMIs. It's called a term, maybe 36 months, 54 months, 80 months, 60 months. Like that, it is fixed within how many term, how many installments the loan has to be repaid. The customers also require for their working capital. So it is not for a particular term or it is not for a particular period. It is a continuously they require that working capital. They are all in the form of CCs or overdrafts. Sometimes they may also require a facility called bills. When the term loan becomes an NPA, when the cash credit becomes an NPA, when the bills becomes an NPA. A term loan is treated as a non-performing asset if interest and or installments of the principal remain overdue for a period of more than 90 days. So here they should have paid the interest as well as the principal on the due date. If they have not paid from the due date for 90 days, the term loan will become an NPA. When the cash credit becomes an NPA, a cash credit or an overdraft account is treated as an NPA if it remains out of order. In the term loan, the word is overdue. In case of a cash credit, out of order. So that two different terminologies we have to be kept in mind. Bills purchased and discounted. Bills purchased and discounted are treated as NPA if they remain overdue for a period of more than 90 days. So bills discounted and not paid, due date is over more than 90 days, that account become an NPA. Other loans overdue for the period of more than 90 days, they will be treated as an NPA. Credit cards. The account will be treated as NPA if the minimum amount due not the total amount. When you get a credit card statement, there they will be mentioned what is the minimum amount to be payable within so and so date. 90 days has been expired from the minimum amount due. Then the credit card dues will become an NPA. Securitization, the asset to be treated as NPA if the amount of liquidity facility remains outstanding for more than 90 days. And derivative transactions, the overdue receivable if these remain unpaid for a period of 90 days from the specified due date or payment. Earlier, when the norms introduced, it was 180 days, then they brought down to 120 days. Now it has become 90 days to meet the international standards. Agriculture advances. So this 90 days concept is not applicable for the agriculture advances. So agriculture, a loan granted for short duration crops will be treated as NPA if the installment of principal or interest thereon remains overdue 2 crop season, and loan granted for long duration crop will be treated as NPA if this installment of principal or interest thereon remains overdue for 1 crop season. So there we are talking about the 90 days overdue, out of order, remain outstanding for more than 90 days. But in case of agriculture advances, that 90 days concept will not work. It's only on the crop seasons. Short duration crop, long duration crop. Short duration crop, if 2 crop seasons they have not paid, the account becomes an NPA. Long duration crop, 1 year, if they have not paid from the due date, it becomes an NPA. As per the guidelines, long duration crops would be crops with the crop season longer than 1 year, and crops which are not longer than crops would be treated as shorter duration crops. The crop season would be as determined by the state level bank committee in each state. It differs from state to state. And who will decide which crop is short duration or long duration is states bank, state level bankers committee. They will decide which is a short term or long term. So when we go for a agriculture based bank, then we have to see which are the short duration crops, long duration crops as notified or as certified by the state level bankers committee, not by the bank of that respective state. When an account becomes out of order concept comes for cash credits and CCs. If the outstanding balance remains continuously in excess of the sanction limit or drawing power, whichever is lower, for 90 days. So sanction limit is one-time concept. When they give the sanction, that limit is fixed. But whereas the drawing power is calculated on month-end basis or submission of the stock statements or the required data by the customer to the banker. So every time after receiving the statements, security given by the bank customers to the bank, so they will submit on periodical basis the statements like stock statement, data statement, whatever against which the bank has given the loan. So they will, after submission of the statements, bank statements or data statement, this drawing power will be calculated. The loan should be either within the limits of the sanction and also within the limits of the drawings power. Always sanction limit and drawing power. The upper limit will be the sanction limit. So sanction limit 10 crores. Their DP may be 12 crores. But there, in such a case, the limit for us is only the sanction limit. Sanction limit 10 crores. DP has come to 8 crores. What will be the limit? DP is the limit. So whichever is, yes. sanction limit or DP, whichever is the less should we take into account for calculating the limits. In case where the outstanding balance in the principal outstanding is less than the sanctioned limit or the drawing cover, whichever is lower, but there are no credits continuously for 90 days as on the date of balance sheet. They will get the sanction to avoid to account become an NPA more than the requirements. They require 10 crores. They will ask, okay, sir, sanction for 12 crores. We will only use only 10 crores. And drawing power also calculates. And they will tell, we have not drawn more than drawing power or more than sanction limit. Where is the concept of NPA? We have drawn less than what is we are eligible for. So where is the question of NPA? The customer will ask. But it cannot be taken it as a right. The account should be operational. The bank should always get money. Then only it becomes a performing asset. So get it sanctioned at the higher or also having the drawing value, and they will remain within that and they will not pay anything to the bank. So that time the bank is not getting anything. So that's why they have not gone with that. They will say, even though it is within the limits, there should have been some credits in the account. Then only the account become performing. And also the credits in that account should be more than the interest debits during that period. Then only it will become a performing. Means the bank at least they should get the interest debited in the account during that quarter to ensure the account is a performing asset.
That is, loan is sanctioned, but list is not utilized. 90 days.
Yes.
Then in that case, it becomes right.
Sanctioned. They have not utilized the full limits within the DP limits.
Even no money is replaced. Only limit is sanctioned.
But where is the outstanding?
There is no outstanding.
No outstanding. There is no outstanding means the bank has not debited the interest.
Yeah.
So where is the bank has not yes, at least interest debit should have been realized. If the amount itself is not dispersed, where is the outstanding balance? Where is the NPA? Because bank has not debited any interest to that account.
Yeah.
So there is no question of any recovery is required. So interest is debited. That interest has not paid back by the bank for 90 days. That account become an NPA. And if the credits are not enough to cover the interest debited during the same period. What is overdue? Any amount due to the bank under any issued by the bank. In line with the international best practices and to ensure greater transparency, the RBI has directed the banks to adopt 90 days overdue concept. There are some special circumstances. These are all the whatever I have spoken so far is a general. There are some exemptions. What we say like proviso, we say some exemption. Like that, there are some special circumstances under which they can ignore that overdue concept or out of order concept. Advances granted under rehabilitation package approved by BIFR or trust. In such a case, even though they have not paid money or even though it is overdue for more than 90 days, still they can be a performing asset. Where that situation comes in respect of advances under rehabilitation package approved by BIFR or term lending institution, the provision should continue to be made in respect of dues to the bank on the existing credit facilities as per their classification as a substandard or doubtful. But the new limit sanction will continue as a performing. This classification cannot be upgraded by the bank unless the package of negotiation terms have worked satisfactorily as a period of 1 year. As regard to additional facilities sanctioned as per the package finalized by BFO or term lending institution, the income recognition and asset classification would apply after a period of 1 year from the date of the disbursement. So first 1 year, this non-performing concept will not apply only for the additional amounts sanctioned. But old one, as per the existing provisioning norms, that will continue. Co-shipment suppliers credit. Where credit extended by the bank or guaranteed by Exim Bank, the extent to which payment has been received from the Exim Bank on guarantee, the advance may not be treated as an NPA. So sometimes this will be guaranteed by Exim Bank and they have paid the amount because the bank will keep this money in a separate account. They will not directly credit to the party account. So if such is the case, we should also take that whatever amount received from Exim Bank to reduce our the provisioning amount. Good standing will be different, but we need not create provision on the full outstanding. After reducing the amount received from Exim Bank, to that extent only we can make the provision. Finance granted to PACs and FSS, primary agriculture credit societies, or farmers self societies. In such cases, they will be issuing different categories of loans to primary agriculture societies. They will have a group of farmers created this society. One time bank will say, okay, we give crop loans. These are the members of the FACS. Sometimes they will say, we will give tractor loans this time. One time they will say, we will give some marginal loan for some other purpose. So in such a case, what happens? In one credit facility given to that banks is working perfectly. Whoever has taken, in the packs, what will happen? There will be a good number of people together, packs. The bank will lend them the money. Maybe for tractors purchase, or maybe for some crop loans, or maybe some cows purchase, like that, different. So those who are tax members only, those who have taken for the cow loans, they will be paying promptly to the bank. The other people who have taken for some crop loan or some animal husbandry loan, they are not paying properly. So you cannot say that because they have not paid properly, will make all your accounts as an NPA. Only the particular facility given to that is treated as standard or performing or non-performing. Not all the facilities given to the tax. If one facility doing perfectly, you should ignore that facility from creating the non-performing. So particular portion of credit in default to be treated as a NPA. Takeout finance. In case of a takeout finance, what happened? One borrower, the Canara Bank, some State Bank, they will approach. Okay, we will take over your this one, and we will give the at lesser rate of interest also, and which the Canara Bank will feel okay. Let this NPA will go out of our books. State Bank will welcome that fellow because seeing their old reputation, or maybe thinking that this will have a better prospects in the future, they will welcome. Canara Bank want to get rid of this. State Bank want to welcome this. State Bank will be giving a loan today, and they cannot say that 90 days not over in my accounts or this account, so I will make it as a standard asset. They cannot do that. When they are taking out like that, whatever the classification status in the Canara Bank only should be adopted in the State Bank of India accounts. They cannot say that still 90 days is not over in my books, that account, so I will treat this as a standard asset. During the time lag involved in taking over, the account may slip to NPA. In respect of such takeover finances, the taking over bank means the institution should classify the account as NPA on the basis of the actual date of NPA with the previous institutions. In my example, it is Canara Bank. Irrespective of the fact that the account was not in its books as on that date. Similarly, the lending institution should also make provision against any asset turning into NPA pending its takeover by the takeover institutions. As and when the asset taken over by the taking over institution, the lending institutions on can reverse such provision. So the main intention of this is in this gap that account should not provisioning part. Either it should be provision should be made in the takeover finance or from the giving away bank. In any one of the books, this provision should be created. Export project finances. Well, in this cases, what happens? State Bank of Vijayawada branch given a loan to one USA based customer of Vijayawada branch exported some items to USA. So State Bank is having a branch there also in where this Vijayawada customer has supplied. So there, instead of directly sending money to Vijayawada branch, so that person has deposited money in State Bank of India, USA branch. Money is kept there. Due to some technical or maybe some this one, that money has not come to our account in Vijayawada branch. Because this money has been credited before the balance sheet date on his customer's behalf in our foreign branch. We can treat that amount as a recovery in the Vijayawada branch books, and to that extent, provisioning norms will not apply as on the date of the balance sheet. But how long we can say money has not come from foreign bank to our 1 year, within 1 year, from the date they say the money has credited in that account should have been come back to Vijayawada branch. Till that time, we can take this schedule. After that, even though they say money has come and it is there, we should ignore that and make the provisioning. Where the actual importer has paid the dues to the bank abroad and the proceeds have not been made good to the bank granting finance due to any political reason, such account need not be classified as NPA if the bank is able to establish through documentary evidence that the importer has cleared the dues in full. The account will, however, have to be considered as NPA if at the end of the 1 year from the date of amount was not deposited by the importer in the bank abroad, the amount has not still been remitted to this branch. Project finder and the moratorium period. So the banks sometimes they will give some loans and also given some moratorium period. So the borrower has no obligation because the bank has given the moratorium period to repay interest or principal during that period. Since the moratorium has given to the customer, the bank cannot stop debiting the interest to that account because it is a receivable, maybe after some time, but as on date, on the accrual concept, it has to be accrued. So the bank will debit to our account, but money will receive after some time. Since the sanction terms itself is interest to be recovered after moratorium period, we cannot say because 90 days is over, you have already debited to the account, so you have not received the money. Please kindly make the provision. So wherever moratorium is given, we should not make a provision for that period. So in case of a bank finance gives an industrial projects for agriculture plantation, etc., where moratorium is available for payment of interest, payment of such interest becomes due after the moratorium or gestation period is over and not on the date of debit of the interest. Therefore, such amounts of interest do not become overdue and hence the accounts do not become NPA with reference to the date of debit of interest. They become overdue after the due date for the payment of interest as per the terms of sanction and consequently NPA norms would apply to those advances from that due date. Advances to staff. There will be two types of advances to staff. One is interest bearing and another one is non-interest bearing. Wherever this non-interest bearing, because they will be given not as a borrower, as an employee-employer relation, they will be giving the non-bearing interest, like some festival advance, like some tour advance, LTC advance. They are all not interest-bearing advances. So, and they will be given as per the terms of employee-employee relation. So it will not come as a advances to the employee. It will be shown as a current assets in the bank balance sheet. So they will not apply the NPA classifications to those accounts. Only interest bearing advances. That too, some banks will have a system. Loan sanction at particular rate of interest and the first principal will be recovered. Subsequently, after once the principal is recovered, interest will be recovered from the party. Because this is a clearly an agreement between the staff and the bank management. Hence, in this case, even though interest will be debited at periodically, but recovered after the principal amount, total amount is recovered. So even the interest debited to the accounts of the staff, this NPA norms will not applicable to those accounts. So in the case of housing loan or a similar advances granted to the staff member, where interest is payable after recovery the principal, interest need not be considered as overdue from the first quarter onwards. Such loans or advances should be classified as NPA only when there is a default in repayment of interest of installment of principal or payment of interest on respective due dates. The staff advances of the bank as an employer and not as a banker are required to be included under the subhead others, under the other assets, not as a loans and advances. So government guaranteed advances. So there will be two types of governments. One is state government advances, one is central government advances.
So here, in employee staff advances, interest bearing advances should be covered under advances.
Advances. It will be coming under the portfolio of the advances. Non-interest bearing and employee-employee relation, that will not come as a this one. So what happens? Issue where it comes. Because our fees is based on the advances fee. You are in marginal. Your slab will change if you add even 10,000 also. You will say, I will add this staff advances here, so my fees will be more. Sir, it is not accepted. So government guaranteed advances, especially when you are in the margin, no, even some 10,000 advances if increase, your slab is going to be changed. That time our mind will work so much, how much we can pull back to that 10,000 to this account. The credit facilities backed by central government guarantees through overdue may become NPA only when the government repudiates the guarantee when invoked, but not recognition of income such advances are treated as NPA. There will be two types of government guaranteed advances. One is state government and central government. So for the state government guaranteed advances, there is no any special treatment. It will be treated like any other advances. Only in case of a central government advances, it cannot be treated as an NPA at all. For the classification purpose only. Demarcation is very clear. We have to understand very clearly. Classification advance is different. Recognition of income is different. For the purpose of classification, government guaranteed advances, central government guaranteed advances, NPA classifications will not apply. But for income recognition purpose, NPA classifications applies. So the credit facilities backed by central government guarantee, though overdue, may become NPA only when the government repudiates the guarantee when invoked. But for recognition of income, such advances are treated as NPA. This exception is not available for the state government guarantee loans. Advances under consortium. There will be different types of advances. One is consortium advances, multiple banking advances, sole banking advances. So multiple banking, everybody, there is no, because it is a multiple banking, each bank will have their own, state bank gives on their own this one, and the Canara Bank will give as per their conditions, and the Bank of Baroda will give as per this one. But the customer is having multiple banks. But in case of a consortium advances, one will be the leader bank, all other will follow the instructions of the lead bank. Earlier, when this norms came, there was a concept, whatever the lead bank classifies, the same classification other banks to continue. But subsequently, it has been changed. Now, individual bank, even though they are the members of the consortium advances, each bank, depending on the records recovery in their books of accounts, they can classify their account. Earlier, we used to wait what they will classify, the lead bank, and we should get the confirmation. We have classified this advance as a NPA or substandard, doubtful or something like that. Same thing, we used to apply and make the provisioning. Now we need not wait for that lead bank, what the stand they have taken. We can ignore and see what is the recovery in the our books, and we can make the NPA, apply the NPA classification norms. So there are, relating to this NPA, there are also some other master circulars available. If in case of a such specific circumstances, we have to look into that master circular and make the provisioning. Such master circulars available are prudential norms for banks for sale of financial assets to securitization company and reconstitution company. If there is a in the bank, in the branch where you are doing the audit, some NPA assets might have been sold to asset recovery branches. In such a cases, we have to go through these prudential norms, like prudential norms for banks for the sale of financial assets to other banks. So specifically, you look into the directions of that particular things applicable to this transaction and apply the norms. Similarly, you have guidelines on purchase and sale of non-performing assets, prudential guidelines on restructuring advances, prudential norms for conversion of principal into debt and equity, prudential norms for conversion of unpaid interest into funded FITL, funded interest term loans, debt or equity instruments, projects under implementation, Insolvency and Bankruptcy Code 2016. So if you come across any advances relating to this type of categories, you cannot end up only with the regular master circular. You should also look into this master circular, specially applicable to that circumstances, and apply your norms as per this master circulars. We have to consider some other points while classification of the advances. Always the banker will tell Sir, he is very, very worthy. Even within 1 hour, he will repay the loan. He is having so much work. But due to some difficulties, he has not paid. So because still he is still worthy, I will take it as a performing asset. So you cannot consider net worth of the customer. It is purely on the recovery of the account, not the net worth of the borrower or the guarantor or the security available. It is purely on the recovery. The money should have been earned by the bank. It should be the concept of the NPA. So even they say his net worth is very good. So we will not make it as an account as an NPA. That we cannot take it as a consideration for making an account performing. Net worth of the borrower or guarantees availability of the security. Since the income recognition is based on the recoveries, net worth of the borrower or guarantor should not be taken into account for the purposes of treatment in advance as an NPA. Likewise, the availability of the security guarantee is not relevant for determining whether the account is an NPA or not. Account with temporary deficiencies not to be classified as NPA. He has not given the stock statement for last 2 months. You cannot take that as a deficiency in the account, classify as account as an NPA. Regularization near about the balance sheet date to be handled properly. The NPA cell at each bank from January to March, rigorously they will be working to see that the first time whatever is slipping to NPA should be avoided. Either they will go to the borrower and will tell your account is going to be slipped into NPA, please make the recovery. First attempt they will do. No, borrower is not at all coming, not at all listening to bank. But bank want to safeguard themselves from the NPA classification, this account. So at the last minute, they will tell, okay, you don't pay, I will give some other loan because that account will be less than 90 days. From that account, you pay back this account. This will account also become a standard. That account also become standard. I will safely you guard this quarter. Please kindly we'll do that adjustment. So that should not happen. But how will come to know as an auditor whether they have done that adjustment or not? We have a now customer identification numbers. If you come across, see there is a concept of SMA, special mention accounts, where they have to classify even the standard whatever accounts, what is the status as per the SMA. On 31st December, it was in SMA 3. I will come to about SMA slides in my future, this one. So as on 31st March, it is SMA 03. That is the last stage of the standard asset to become an NPA. So we can take a list of that SMA 03 or SMA 02 on 31st December and see whether that account has been properly regularized before 31st March to remain in the standard asset. So in such a, if they have not repaid and some credits have come by giving some new fresh loans and this account they have made it as a standard and with that fresh loans also treated as a standard asset. So if you generate a list of such accounts of as per the customer identification number, will come to know what are the new facilities given to that customer before the balance sheet date and adjusted. For everything, there is a control. It's only with our mental judgment at particular spot that helps a lot for us. Regular and ad hoc limits are required from the due date or date of sanction, else it is classified as an NPA. When this ad hoc limits comes into picture, while sanctioning the loan, the banker will assess what is the requirements of the customer for another review period or maybe till the end of next renew or review. So they will assess what is their requirement till that time, and they will sanction the limits. Suddenly, what happens? The customer, what he has not projected as on the date of sanction, he will get a big order, one export order. Regular his business is 100 crores. Limits has been assessed as per the 100 crores and sanctioned. Subsequently, maybe due to his luck, he will get one order for another 100 crores, which he has to execute immediately and submit, and his bills will be released shortly. In such a case, he will approach to the bank. Sir, suddenly I got this, I need a further money. Not that adoptions cannot be issued or cannot be sanctioned. It can be sanctioned because it is his requirement for his additional requirement than the assessed sanctioned limits. Such a case, the bank manager will put up to the, if it is in within his delegation, he will do, or otherwise he will take approval from the official head of the sanctioned limit and give the ad hoc limit. So this ad hoc limit is only for the temporary. Sir, I will execute, I will get back this money within 90 days, I will pay back this money. So this ad hoc limit cannot continue for a long period. That has to be regularized. Regularization, regular and ad hoc limits are required to be reviewed, regularized within a 180 days from the due date. So if that ad hoc limit is given within 180 days, that money should have been come back. Otherwise, that account, even the ad hoc limit, even regular limit as well as ad hoc limit will become an NPA. Asset classification to be borrower wise, not facility wise. Facilities, you may be having a term loan, OD, bills, or other loans, different types of category facilities loan. The customer might have been got. Subsequently, he is very prompt in paying the term loans, but he is not prompt in his current account or overdraft account or overseas accounts. There he become when we apply out of order concept, that account has become irregular. But he will say, because I am irregular only in case of the SEC, don't make my term loan as an NPA, only make my CC account as an NPA. That bank cannot agree. Once he is an NPA in one facility, all his accounts should to be classified as an NPA. This we have to once again apply customer identification number, take out all the facilities is having. If one account has become NPA, we have to confirm all other accounts also made as a NPA and provision has been done accordingly.
The hawk limit 180. So there the NPA for the normal loan approach 90 and this is 180 days. You need to say if ad hoc limit is not recognized within 180 days, then forget about 90 days and 90 days and
Yes.
regular motion.
Yes, all. Erosion in the value of securities and frauds committed by borrowers. If erosion in the value of security is more than 50%, asset to be classified as a doubtful straight away. If realizable value of the security is less than 10% of the outstanding in the borrower account, asset should be classified as a loss asset. So we have in my earlier slides, we have told first it is a standard, then it comes to substandard, then it comes to doubtful, then it comes to loss assets. But in case where the realizable value of the asset segment, you need not go into like first it should come to substandard, then only it should go to doubtful. In such a case, you can straight away take it as to doubtful asset if there is a erosion in the value of the asset by more than 50%. what is assessed earlier. So this we can come to know when we regularize, for example, 100 crores is the loan. For 120 crores, every month end. Suddenly, some fire happens. 60 out of 120 crores stock what he was giving, 60 crores has been lost in the fire accident. So remaining asset is only 50. But your required percentage is not there. There is an erosion in the value, maybe intentional, maybe any circumstances. If the value has come down by more than 50% of your accessible value, the account need not go as a substandard and then doubtful. You can straight away take it to doubtful asset. So in case of this, anybody? You cannot take it to 100%. But depending on the security value, percentage will change. But it will go to D1. Once it is unsecured full, you have to create 100%. Can I use mic to you, madam? Mic, please. Mic. Also image with regular limit. This honest limits concept will come mainly in case of a CC, because the term loans there will not be any ad hoc. As I told you, you have assessed what normally happens. This assessment of working capital requirements will be done till next review period, maybe 1 year, maybe 3 years. So his business requirement as per his turnover and all, 100 crores. We have sanctioned 100 crores. He was functioning nicely. Suddenly he got an order than his regular business, another 50 crores extra order. So which he has to execute immediately. So he will approach to the bank and he will ask, because I have got extra working capital my requirement because of this order, please give me some ad hoc limit. Ad hoc limit, that time the bank manager, depending on the documentary evidence what he has given, that order copy and all those things, is again the extra working capital requirement, they will sanction. This ad hoc limit, because it is a temporarily given to the customer. So he has to regularize that ad hoc limit into normal than the regular normal limits. Within 180 days, we should close that.
Be sanctioned on 1st January.
Yes.
Then it should be paid within 180 days.
Yes. Before June 30th.
Before 30th June.
Yes. So, but as on 31st March, we are doing.
Yes.
So, this ad hoc sanction limit 180 days is not over. But all other things, 90 days norms is applying. In such a case, that account should not become an NPA. That within 180 days, if he has not regularized that ad hoc, then account becomes an NPA.
If regular interest is not paid within 3 months, then it should be
regular is paid only for this ad hoc. This ad hoc limit should have been regularized in 180 days. Got it?
Are the bankers
Please give the mic to the person who is asking the doubts, so that others also get clarity.
Do the bankers play around sanctioning ad hoc limits to work on the NP?
No.
They
No. Ad hoc limit should be for extra business requirements only.
So, no, as an auditor, do we have to confirm that my document evidence it is a
Yes,
genuine?
yes. All the ad hoc documents sanctioned, we should review. Either it is on the request, means he should have an additional business requirement to give the ad hoc.
So we have to verify it is a genuine one or?
Yes. Any regularization of accounts before the balance sheet date to avoid NPA, we should be doubly careful.
Between 28 and 31st March, because we have to calculate other account parts.
Yes, yes. One facility becomes NPA, all other this becomes NPA. Advances against term deposits, NSCs, KVPs, IVPs, and LIC policies need not be treated as NPA, provided adequate margin is available in the accounts. So, because term deposits, it is our own deposits, NSC, KVP, IVP, and LIC, all backed by government. That is why NPA classification is not applicable, even though interest is debited and not paid. Provided sufficient margin means as on the day, loan NSC value about 5 lakhs, loan sanctioned 4 lakhs. After applying this interest, the outstanding balance should be less than the face value. If it is more than that, then NPA classification will apply. If it is less than the face value of this one, account need not be treated as an NPA.
So, follow. Similarly, in the NPA classification, you said it is not security value based on that we have to classify NPA. It is based on recovery.
Yes.
So, but here erosion in the security value is coming. This is also affecting classification, right?
Yes. Because here, this is only to make straight away to doubtful. Because this asset what he has given to us, bank will have some margin. So if a loan is sanctioned for, if its security is 100 crores, so bank will always maintain 20% margin, and they will ask, they will give only 80 lakhs. But 100 crores has become now 40 crores. So there is a straight security value has come down. That is the reason you should straight away take it to 100%. It means doubtful asset, not as a first it should go to substandard and then go to doubtful. That's the
This is for the internal classification, specifically they mentioned.
yes.
Okay. Sir, one more doubt. Say for example, a security for whatever loan, home loan case. Home is not home is the security, and that security itself is not created.
Hmm.
There also we can
Yes.
classify it as
So
a
what happens in your case? One housing loan given. At the time of loan, the banker has felt the documents are very clear. Subsequently, some court litigation may come. In the court litigation, the other party will win. So what is the security up to the bank? It has become zero. So that case, because till last month, he is a software engineer, he has taken a loan, housing loan. So bank has also waited the documents and given the loan. But subsequently, due to some litigation, that software engineer is lost the case. So asset is taken over by somebody. But loan remains in our books. So erosion in the value of the security, it has become zero. So we have to take this account directly to NPUs, not as per the first it should go to substandard, then go to like that. So that is the situation. This will happen in case of a housing loans like this, or in case of a CC and this one, like fire happened, like some theft happened, some litigation happened, security value has come down. So in such a case, we should not follow the process of substandard, then doubtful like that. You can directly take it down.
even in our government's case also last time bankers has supported the government for giving loans, home loans to the people elections time. That time the new government came and they didn't allotted the houses to the people. So all those loans, whatever bankers have supported,
Yes.
now they become jeopardy and they have to be transferred as a child.
When there is a security,
Security.
what for it is given, whether it is a previous government, this government, as on date,
That is
if
the
they don't have the security, they should take it to doubtful directly. Sir? Thank you. Mike, please.
Primary
Ah,
assets like stocks or group debts or assets appear.
yes.
State government gives guarantee. What is the status of the asset?
State government guarantees, we have no any different classification. It will be treated like any other advance. Only if it is guaranteed by central government, you can. Ah, if in case of a doubtful, it is already in NPA. Yes. State government guarantee is not at all considered for any purposes. Yes. Yes. Mhm. So in case of NPA balances above 5 crores, stock audit is compulsory. If the stock audit has not been done, we should report in our report. The provision on standard asset should not be reckoned for arriving the net NPAs. The provision towards the standard asset need not be netted from the gross advances. This is only provisioning figure will not be making any provision in the books of the bank. We only certifying what is the provision required for that particular branch. So the final provisioning entries will be passed at the central offices. We should not insist to pass the entry for provisioning. The reversal of income. See, for example, sometimes the account has become an NPA and provision has been done. Subsequently, he will make some payment. So, how to additional amount received from the NPA accounts? The bank will have a policy. First, the amount received will be adjusted towards the interest dues of the earlier years, of the current years, and the balance only will be treated to adjusted to principal amount. But in case of if they don't have a particular instructions from the head office, so we have to see what is the first it should be appropriated to income arrears, then only to the balance only to the principal amount. So in case it is only not for the interest, it is only for the any charges like commission debited or any recovery charges debited to the party, and it is not recognized. Once the account becomes an NPA, all should be reversed to unrealized income.
He used the bank's policy should be followed, but I think it is not bank's policy. That is
If not, yes, order should be first arrears interest and current year interest, and then to the principal. Sir? If in case of a doubtful asset, 25%, 40%, and 100%. So in security portion, 25, 40, 100, unsecured portion, 100%. Security is not there, so the even doubtful asset, it becomes an unsecured. So 100%, even it is a first year doubtful, second year doubtful, or last year. Last means asset value is 0, 100% provision is required in case of the slide is not free.
Yeah.
Okay. Or show recovery. So loss assets, we have to make 100% provision irrespective of the security value. In case of a doubtful assets, unsecured portion, 100%, whether it is a D1, D2, D3, 100% provision in case of an unsecured portion. In case of a secured portion, 25%, 40%, 100% in case of a D1, D2, D3, respectively. Substandard assets, where you make what provision you make on the doubtful and loss assets is a perfect provision. Whatever you do for the standard assets and the substandard asset is a ad hoc provision, because it is not exactly based on the security value. It is a 15% of the total advances. So it is like ad hoc provision which will be calculated. So 15% general provision on outstanding balance, additional 10% provision if there is no security in case of a substandard assets. For the standard assets also, as a prudence of the accounts, the RBI is insisting to make a different rates of provisioning rates for the different types of advances in case of a standard assets also. So this advance is granted on rehabilitation package, as we discussed earlier, the treatment will be different. So the provisioning will be made on the existing facilities as per the present position. For the additional this one, depending on the classification, the provisioning will be done. Advances against gold ornaments, government securities attract the provisioning as per their classification. Many times they say government, the gold loans is a fully security we have will not make the provision, but gold loans has no any exception regarding the classification and provisioning part. Doubtful advances guaranteed by ECGC and CGIT TS, where it is guaranteed by ECGC, that much portion we should reduce, and the balance portion only we should make the provisioning. I told you SMA, special mentioned accounts. So this classification is mandatory by the banks now. This is the biggest and the best available source to us to take care whether the NPS slipping has been misrepresented by the bank and classified as an NPS. Because in case of SMA 0, SMA 1, SMA 2, these three categories they have to make. SMA 01 cases, it's a no any deficiencies bank has noticed, and this SMA 01, they have some weaknesses are there, not beyond 60 days irregularity is there. But SMA 3, this is irregularity is there between 90 days. SMA 2 cases we have to be very, very seriously look into what was SMA 2 on 31st December should have become an NPA if there is no regularization. So this will be a biggest tool for us to verify, as we discussed, any adjustments have been done to make an account as a performing instead of NPA. So if the bank has not followed this SMA status or this one, the bank has to make an accelerated provision if they have not followed the SMA status properly. This is the percentage of accelerated provision which they have to make. I have made some tips to make what is the, how we can check whether the provisions have been done or not. Compare previous year NPA account with current year to ensure all accounts have been moved to correctly category as per the AG. Last year it was a substandard asset. 100% if they have not upgraded, that account must have fallen to D1 category. So take out what are the substandard assets as on 31st March 2023 and 24, you see whether that account has come to D1 or not. Earlier, last year it was in D1, this year should have been gone to D2. Last 2 years it was in D2, this year should have been gone to D3. Like that, last year comparison with accounts, we can make whether that movement of aging has been moved or not perfectly. So one, it is a one control. The other one is scrutinize SMA a report of the last 2 quarters, ensure those accounts should not have been slipped into NPA unless regularized. Facility-wise subtotals should tally with the balance sheet totals at the year end. So they will make a facility-wise when we ask for the provisioning part calculation, they will say facility-wise, and then one category will come asset-wise, security-wise. They prepare different types of formats. So the facility-wise For example, term loans, total. Whatever the schedule they have given, the total should have been tallied with your balance sheet figure. Then only we can confirm all the facilities they have charted down is correct. Nothing has been missed. Test check the manually the percentage of properly working with NPA classification as per IRAC norms. So they have to provide the 15% on the substandard and doubtful 25, 40, 100. For few accounts, you calculate manually whether the percentage, the system calculation is correct or not. Compare security values on the last balance sheet and the current year. So when they give the security value, you see that last year what was the security value given, because it is not a system generated security values. Normally, these people have been fed that value. It will not be captured from the, because security value keeps on changing. So while feeding, last year security value is 100 crores. Suddenly they will put it to 200 crores this time. So wherever that type of their security values, you should check. Ensure reversal of the unrealized interest. Check all the accounts first time slipped into NPS. Check all the credits in NPA accounts to ensure that recoveries in the accounts are first appropriated to income account. Take deep look into the accounts where concurrent auditors, RBI auditors, bank CO inspection team pointed out signals of probable NPS. This will be one of the for us which gives a comfortness. So in the previous concurrent auditor, if he has pointed out this account is having a lot of weaknesses, the bank has to rectify. If they have not still rectified, whether the bank has taken it as an NPA or not, we can just verify. Look into RBI inspection reports, concurrent auditors reports, and then sometimes they will have the central office inspection team. If they have done the central inspection audit before the balance sheet date, somewhere in January, February, March, that report will be a excellent for our comfortness. MOC is raised by the previous auditors and confirm whether the same have been affected in the books. Compare previous year provisioning figure and current year figures. I think with this, my presentation on today's topics of the documentation and planning and this one. In the morning, chairman's comment, he was mentioning after two days session, you will be going with lots of knowledge, but sometimes the seminars will confuse. When we attend, we'll get a sometimes a feeling whether to do these audits or not. So I hope I have clarified your this one. Whatever the best I can do in these 2 hours of my allotted time, I did my best. If anything is there, still my mail ID is there. You can write to me. And it's very glad to see all of you and opportunity given by your management committee to give this presentation to you. I thank your managing committee and the participants for their active involvement in today's session. Thank you very much.
Thank you, sir. Thank you very much for your detailed session. That may be on the audit planning or that may be on IRAC norms. Definitely, the session is helpful for the upcoming audit, sir. So now I request Chairman of the branch, Ramkishore, sir, to hand over memento to
Well, after what is the probability of getting bank guides this year?
I strongly feel all of people present here should get the bank auditor.
Yeah, that's really interesting.
Because we always should live in a positive environment. Always being better for us.
So we have lunch on 3rd floor backside room. We'll disperse for lunch now. Sharp 2 o'clock, we again reassemble here for the next session. ప్లీజ్.
రీసౌండ్ వస్తుందండి, మరి దేశంలోకి ఏం చెప్తాం?
యా, లెట్స్ డిస్కస్ ఫర్ లంచ్. థ్యాంక్ యూ. Round back statement.
Sorry,